Hello everyone, this is Brad McMahon with Trader Trading Headquarters. You are watching our free educational video series for traders and investors. All we ask in return is that if you like the video, like it, and if you really like it, share it with a friend. Now, identifying a bear flag can be easy once you know what you're looking for. The pattern itself is divided into three parts. First, we need to find the flagpole, which will be identified as the initial decline. Now, this decline can be steep or slowly sloping and will establish the basis for our trend. Next, we have the flag itself. This is identified as a period of consolidation after the completion of price's initial decline. During this period, prices may slowly channel upward and retrace a portion of the initial move. At this point, traders will wait for price to break to lower lows in the direction of the trend. Now, bearish flags are comprised of a flagpole, and then the body of the flag is a formation of higher tops and higher bottoms. A bear flag also has a tendency to slope against the trend. The actual trend lines run parallel to each other. Let's take a look at Coca-Cola. Now, for a bear flag to be considered a continuation pattern, there should be evidence of a prior trend. A bear flag requires evidence of a sharp decline on heavy volume. This type of move usually occurs on heavy volume and will sometimes contain gaps. This move usually represents the first leg of a significant decline, and the flag is merely at a pause in the price action. Now, the flagpole itself is the distance from the first resistance to the lowest part of the flag. The sharp decline that forms the flagpole should break a trend line of some type of support level. The sharp decline that forms the flagpole should break a trend line or some type of support level. A line extending up from this break to the high of the flag forms the flagpole. Now, the flag itself is a small rectangular pattern that slopes against the trend. Because flags are usually too short in duration to actually have reaction highs and reaction lows, the price action just needs to be contained within these two parallel trend lines. As far as duration, flags are a short-term pattern that can last anywhere from 1 to 12 weeks. Now, ideally, these patterns will form between 1 to 4 weeks. But once a flag becomes more than 12 weeks old, it usually turns into some other formation, such as a symmetrical triangle or a rectangle. Now let's look at Beazer Homes for the breakdown of the flag. For a bearish flag, a break below the support signals that a previous decline has resumed. Now, the volume should be heavy during this decline, and heavy volume provides legitimacy for the sudden and sharp move that creates the flagpole. An expansion of volume when it breaks support gives us the confirmation that we're looking for to enter the trade, and the likelihood of a continuation is more favorable. In order to estimate targets, take the length of the flagpole and apply it to where we broke the support of the flag. Now, if we look back at Coca-Cola, the technical target for this bear flag pattern is calculated by subtracting the height of the flagpole from here from the eventual breakout or breakdown level right here. And our entry would be around the $38 price. On Beazer Homes, you can see our entry price was right at the $100 mark, and we actually gapped down to this. Even though this is a common formation, it's important to note that bear flags are always preceded by a sharp decline. Without a sharp move, the reliability of the formation becomes questionable and trading could carry additional risk. So look for volume confirmation on the initial move, consolidation, and then more volume on the follow-through. Thanks for watching the video. This is the bear flag chart pattern. If you like this video and would like to learn more about stock charts and patterns, visit our website at tradertraininghq.com. Here you will find lots of information on trading the markets. Go to our training tab and you'll find free courses, articles, TradingView charts, watch lists, trade examples, books, and even a chat room. If you'd like to get a feel for our membership benefits, fill out this information here and create a password and you'll get access to more free lessons. The free lessons include simpler stock trading for beginners, candlestick patterns, chart patterns, free introduction videos, webinars, and a trading community where you can access all of our social media links. Please take a moment to read our disclaimer. The information provided herein is our opinions only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.